The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, it's Mike Baltos from Order Flows, and welcome to this presentation on trading consistently with order flow. And it's interesting times that we're in. Everyone's on basically the entire 90% of the United States is on lockdown, and trading is one of those businesses that you can do from your home. And I know a lot of people are wondering, what am I going to do now that I'm at home? How can I make money? If you know how to trade, actually you can do it from anywhere in the world. And I'm going to show you today how using order flow is going to help you become a more consistent trader. And what you're going to see today is how order flow can help you understand the market. And I'm going to show you ways how to understand the market easily with order flow, how you can get an edge over other traders by seeing what they don't. And I'm going to talk about how to become consistent in your trading with order flow. It's going to be very quick, very to the point, hopefully. And, I should get through it in about 45 minutes. Now, your end destination, ask yourself where you are now, where you want to be in the future, right? And, generally I like to tell my students, people that I work with teaching how to trade, you don't need 10,000 hours. There's a lot of people say, well, you need 10,000 hours of screen time to become good. No, you don't, right? Who's got, if you ever break down what this whole 10,000 hour uh, stuff is about, who has 10,000, that's 5 years, right? If you work a full-time job, that's basically 2,000 hours a year. You're going to spend 5 years of your life learning how to trade. No, you know what? If you get the right education, if you get the right training and the right tools, you could um, get from point A to point B much faster. I tell a lot of people, I said, if in 30 days you don't understand what's happening in the market with the order flow, or you don't become more consistent in your trading, come back to me and, I'll help you break down the areas that you're struggling on. So basically what you have to do is you have to fix how you view the market. The whole thing with trading, is people think that they can distill what's happening into the market into a simple equation. There's a lot of people that come to trading that have a programming background, that have an engineering background, and they think in binary, one or zeros or ones. And trading is a little bit more artistic than that. I don't think artistic is the right word, but there's so many different little nuances in the market that trying to think that everything has got its proper place in the market doesn't always work. So you have to think a little bit outside the box. Sometimes you got to be a little bit creative in the way you think. Don't think that everything has to be exact. There's a sometimes 1+1 doesn't necessarily equal two, right? The 1+1 in trading world sometimes equals 1.5, and I'm going to show you what that means later. Now, the whole focus of this seminar, okay, what I want you to get to, right? This is me in the 1990s, right, when I was struggling to learn how to trade. Okay, I had my old 486 computer, I was manually typing in data in there. Versus in 2010, when I was getting an award from the Singapore Exchange, the SGX, for the amount of volume that we're trading. I went from basically someone that was struggling and didn't know much about anything to being, one of the biggest volume providers of liquidity on the SGX exchange. And the way I did that is by understanding how the market trades and how order flow affects the market. So by the end of this webinar, right, you'll be able to understand why and how something is happening in the market instead of just what happened in the market, right? Most traders, they just want to look at a chart and see, well, price hit this level, then sold off, right? But, if you're a real student of the game, so to speak, real student of the markets, you want to know why the market sold off from that level and how it sold off from that level. And that's what order flows helps you to understand, the why and the how of what's happening in the market. So for those of you that are new to order flow, to a presentation by me, just a quick background so you understand where I'm coming from, right? I started on the CME floor as a runner with Dean Witter Reynolds in the early 90s. Okay, and eventually, that was good. I had a lot of fun. I loved the trading floor environment, but I realized things were starting to go electronic. right? This was, back in the early 90s. The exchanges, CME just opened up Globex, the overnight session. CBOT had Project A. The NYMEX Comex had Access, it was called. And the rest of the world still traded electronically, except for the DTB, which in Germany traded the Bunds and Babel and Schatz. That was electronic. And then, you know, so I left the trading floor when everything started going electronic very early. Honestly, not a lot of people put a lot of emphasis on the overnight session in there, but I realized that that's probably where the future is going to be. Everything was going to go electronic, and it took about 10 years for things to really make that shift. But I spent 3 years with Dean Witter on the trading floor and on their Globex trading desk. Then I left there to join EDF Man. I spent 2 years there on the global macro trading desk. Again, we traded all the electronic markets and all the voice markets. Then after that, I joined Commerzbank, the big German bank. I was their licensed Eurex trader, trading Bunds, Babel, Schatz, DAX, Euro stocks, and then trading it all against the U.S. products, right? The Bund is a 10-year contract. We would trade it against the CBOT 10-year. Obviously, the DAX we would trade against the E-minis at the time. E-minis were just starting up, the NASDAQ as well. After Commerzbank, I joined Cargill. I spent 4 years there. I spent a few years in Chicago and a few years in Singapore. They sent me out to Singapore to set up a futures trading desk when the CYMEX closed their trading floor in 2005. And after Cargill, I joined JP Morgan. I spent 8 years there as vice president of futures trading, trading on the trading desk, right? I wasn't sitting in some corner office, looking at spreadsheets telling people, oh, your risk is too high. No, I was the one banging away on the keyboard, trading. And then after JP Morgan, I decided I've had enough, right, of this corporate world. And I left. My daughter was born a few months before I left. And I started writing a book on trading. And in 2015, I started the company Order Flows, which is an order flow software company. Actually, I started it based on my book, right? I thought I was just going to write a book on trading, but then, yeah, I was trading for myself and I was using another company's footprint chart. But I realized, I could make this better, right? Because there was ways that I was using order flow in the past and at JP Morgan and currently for my personal trading that I want to take that analysis and put it into the software, into the footprint so that it can take some of the heavy lifting on me and I can concentrate more on managing the trades rather than spending so much time looking for a trade, right? Because looking for a trade, finding a trade is one thing. You still, once you pull the trigger, you get into the trade, you still got to manage it, right? And managing a trade takes a lot of time, and I'll say a lot of time, but it takes a lot of energy, it takes a lot of emotional capital that having that computer do some of the analysis for me, it just lets me manage the trading more, right? And I could look at a few more markets. Now, at the time, there was a few platforms out there. There was NinjaTrader, Sierra Charts, and a few other platforms. I chose NinjaTrader because the programmer that I found I had already created a software for NinjaTrader. So I said, hey, take these tools, and then put them into um, your footprint, and that's what I'm going to use for trading. So I was just using it for myself, but then I was talking to other people, and people were interested in using it. So that's how the orderflows.com company was born. Now, the big advantage for this is that the order flows traders software users is they don't have to make the calculations, right? A lot of calculations, a lot of the analysis that I was doing with order flow, I was basically doing manually, basically doing visually. And I said, you know what, take all these different little nuances that I'm seeing in the markets, put them into the software, right? So that's what the order flows trader software does, right? It plots all that analysis onto the volume footprint chart. Now, what makes the order flows trader software, um, or any footprint, right, for that matter, is it takes all that information and traded volume for every market or time frame, and it puts it into an easy to read format, right? You don't want to be scratching your head, well, should I be looking to buy here or should I be looking to sell here? You want to say, you want to be able to make the decision like that. Yeah, I should buy here, I should sell. Okay. And that's where having good software to help you with your analysis and do some of the analysis is going to put you ahead of other traders. Now, like I said before, in after I left JP Morgan, I started writing a book on trading. It's called Trading Order Flow. And if you stick around to the end, I'm going to show you how to get it for free. I'm going to give you a download link that you can download it for free. So it's going to behoove you to stick around to the end. So what I'm presenting here is what I've developed for myself and built my trading career on. When I say trading career, I don't mean I just traded my own account while I was living in a one-bedroom apartment. No, I traded at JP Morgan, at Commerzbank, at Cargill. I traded at all these big firms, right? And you don't last, I spent 8 years at JP Morgan. You don't last that long at a bank like that unless you're good at what you do. And I'm not saying that to brag or anything, but it's to sit on a trading desk and trade day in and day out. You got to be producing numbers, right? You got to be doing something good. You got to be generating revenue for the bank, or at Cargill, right? You got to be adding value. If you're just going to be sitting there collecting a paycheck, they're going to tell you get lost, right? So what I'm using, what I used back then is what I use now in my trading, and it's what I had put into this form of analysis into the software. Now I'm not saying that you have to follow what I say just because I say it. Oh, well, Mike says you have to buy because of this or sell. No, you have to evaluate everything, and whether it's from me or whether it's from someone else, decide if it's going to help you in your trading and reject it. Trading is a very personal endeavor, right? You have to have a trading plan that suits your personality. You can't trade somebody else's method unless it suits, your risk profile, right? If, you know, I have a certain risk profile, it probably differs from somebody else. My wife has a different risk profile than what I have. And, while someone may be willing to take a little bit more risk, someone else might not. So, you have to find where you're comfortable and where you are, with your trading. There's so many different ways to trade, honestly, that, every risk profile I think should be covered. But I'm going to explain to you how committing to order flow changed it all for me, right? Because this is about, I want you to understand my personal journey, right? Once I committed to order flow, everything changed, right? My trading improved, and once my trading improved, I started getting job offers at major banks and trading firms that were very lucrative. Honestly, when I got to JP Morgan, that was it. I said, this is it. This is where I'm going to retire from. Um, and I would get calls like literally every month from headhunters, you know, just because, they hear about you if you're successful. Okay. And it, how did I do it? I do it because I know how to read the markets, right? When you understand why and how a market trades, you can get anything, in life. When I say get anything, trading provides a lot of rewards. Okay. If you're good at it, you apply yourself, it's a very rewarding career. And, and I don't just talk about the money, but, the time that you could spend with your family, because you don't have to spend 10 hours a day in the office or going on vacations. So many nice things that you can do is the rewards of being a successful trader, but you have to know how to trade. So before I jump into it again, I talk about my past, but I want you to understand, trading involves risk. You know, when you're trading, use risk capital that you can afford to lose and only trade with sufficient risk capital. And, sometimes people will say, well, you know what, Mike, I've got this lump sum of money and it's got to last me for 6 months and I got to get a job. Teach me how to trade so I don't have to get a job. Don't put yourself in that position, right? Don't be in a race against time to have to, try and get to a level in trading, because you're going to put yourself under a lot of stress and it's not going to be healthy. So again, the markets have been there for 100 years. They most likely will be there for another 100 years. take your time. Don't put money that's you need for other daily living expenses into a trading account. Think that you're going to become, the next Tom Baldwin or Paul Tudor Jones. You know, that's not to say that you can't, but again, be prudent in your decisions. So first thing I want to talk about is, understanding the why markets move, and being able to react to it rather than that the market just moved. And, the way to describe it is understanding the market, right? You want to understand why a market is moving, not that just it moved, right? This is this morning in the S&Ps, right? We had our low down here at, the 50, I forgot what this was, 51 and a quarter, then rallied. Most traders will say, well, we hit that low and we rallied. They'll draw a trend line and they'll react to that. Well, an order flow trader wants to look at the low and understand why we rallied off this low, because it's going to help them get in to the market at a much better price. So basic trading 101, right? For every buyer there's a seller, right? Well, then how does the market move, right? Because you have a buyer, you have a seller, but for if everyone's happy to trade with each other at one level, at one price, the market's not going to move. It's just going to stay at that price all day long. You have to understand the different types of buyers and sellers. And there are 4 types of market participants. I'll just go through them really quick. All right, you have aggressive buyers, you have aggressive sellers, passive buyers, passive sellers. All right, so you have aggressive traders and you have passive traders. Now, aggressive buyers are those that buy at the market. They lift the offer, right? Aggressive buyers see the offer. It's market is 6 bid at 7. They buy the 7s. Next thing, it's offered at 8. Okay, I like 8s, I'll buy 8s. They're being aggressive. They're lifting the offer. They're buying at the market. Aggressive sellers do the opposite. They sell at the market. They hit the bid, right? The market is 6 bid at 7. They sell the 6s. They sell the 5s. They sell the 4s, right? They're being aggressive. Passive buyers are the people that work a bid or work a bid below the best bid, right? Passive sellers are those that work limits on the offer or above the offer. And if you've ever looked at a dome, okay, most of us are familiar with the trading dome. Passive sellers are those that are sitting on the offer on the above the current offer. Passive buyers are those sitting on the bid and below, right? For a trade to happen, someone has to cross the bid ask, right? Someone working on either has to come in and lift the offer rather than join the bid, or a seller has to come in and sell at the market, or someone that's working an offer has to move down and hit a bid, right? Otherwise, the market's just going to sit there. It's not going to move. If everyone's just going to say, I'm only going to pay 50, to buy, and everyone's going to say, well, I'm only going to sell at 75, it's not going to move, right? Someone has to go down, change their mind, hit the bid. Someone has to think that this market is going to go lower, start hitting the bids. Someone's going to say, you know what, I don't want to be long anymore. I just want to get out of my position, hit the bid. So, that's what causes markets to move. However, there is a limitation on DOME, on depth of market trading, is that it moves so fast that you have to memorize everything, right? And it's going to be difficult as a trader trying to memorize what's going on, in the market. You can't, right? It's just moving so fast. You'd have to be like Rain Man or somebody to understand and keep track of what's happening, and let alone make any sort of educated trading decision off of it. Now, the order flow trader footprint chart, right, takes all that information that you see on the dome going back and forth, what was traded on the bid, what was traded on the offer, and puts it in a nice, easy to read format so that you can make an educated trading decision, right? And an order flow footprint chart shows very precisely where volume is transacting, on the bid and on the offer, the strength of the trading, weakness in the trading, and puts it in an easy to interpret format so you can analyze that data in terms of market structure. And by understanding trading occurring in the market between aggressive traders and passive traders, you can gain an understanding as to what is happening in the market at any given point in time. So, just the facts, the basic facts about trading. Markets move on aggressive trading. right? Aggressive trading leads to market imbalances. Aggressive trading and market imbalances show up in the order flow. You just need to know how to look at it. Now, in the order flow, just really quick, I'm going to go, there's basically three fundamental parts of the order flow. It's delta, imbalances, and points of control. I'm going to just run through each of those really quick so you understand. Now, delta is the difference between aggressive buyers and aggressive sellers in a bar, right? Remember before I said there's four types of traders. There's aggressive buyers, aggressive sellers, passive traders, passive buyers, passive sellers. Delta measures the difference between the aggressive buyers, people buying at the offer, versus aggressive sellers, sellers selling into the bid. Why is that important? It's because you want to know who is dominating in the bar. And even within delta, there are four types of delta that you can look at. Delta generally on most software, mine in particular, is on the bottom of the chart. All right, it keeps it nice and neat down here. You know, some software likes to put it above and below the bar, but at the end of the day, you're just cluttering up your chart, and it's just, you know, you're just going to be overwhelmed with stuff. You know, I prefer it down on the bottom because I know where it is. It's easy for me to reference. You know, once I start seeing more numbers, you know, it just adds more ingredients into the recipe. But you're gonna see delta, max delta, min delta, cumulative delta, and you know the volume for the bar. Now people say, Mike, what's the difference between these different delta numbers, right? Before you told me there's just delta, but you can break down delta a little bit, right? Delta, again, the difference between aggressive buyers and aggressive sellers in a bar. Max delta is the strongest aggressive buyers were in a bar at one point. So it tells you how strong aggressive buyers were in that bar. Now it could be zero. It means that aggressive buyers were never in control, right? Or it could be, you know, whatever number, 100, 200, 1,000. Min delta is the opposite. It's the strongest aggressive sellers were in a bar at one point. So, you know, it's going to tell you, you know, again, it could be zero or it could be like minus 300, tell you that at the one point in the bar, the strongest that aggressive sellers were over aggressive buyers was 300. Okay, now then there's cumulative delta, which is the total delta for the trading session. And again, it's going to run along the bottom. So, you know, let's just take a look at what these numbers mean. So generally, markets go down when you have periods of negative delta, right? Markets go up generally on positive delta. You can see as this market is moving up, positive delta in each bar, right? As the market was coming down, you had negative delta in each bar. Aggressive sellers were in control. Then it said positive delta, negative delta as we went sideways, and then positive delta again on the move back up. Simple, right? Max delta, again, what does max delta tell you? It's the how strong aggressive buying was at any point in the bar. So once you start understanding, you know, what delta means in terms of aggressive trading, then you can start looking at the max and min delta. Okay, so this market, right? This is S&Ps yesterday, right? Remember we rallied yesterday, and as we're going up to the high of the day, you want to know, is this market going to keep moving higher, right? Or is it going to hit the high and potentially sell off? Well, if you're looking at the max delta in relation to the final delta, just the normal delta, and the min delta, you're going to see that, yeah, there's a lot of aggressive buying, right? You're seeing these bars here, right? There's a bar here. It's got positive delta of 360. It had a max delta of 366. So we're closing right near our delta, you know, right near our max delta. 360 is our final delta when the bar closed. It had a max delta of 366. So it's only 6 contracts off. Min delta, 0. At no point were aggressive sellers in control of this bar. Next bar, max delta is 271. Final delta is 170. Min delta is 0. At no point were aggressive sellers in control of this bar. Then it goes back and forth here, you know, negative delta, negative delta, and then positive delta again, 193. Our max delta was 194. So we're closing right practically on our max delta. Min delta was only minus 6. Nothing. Very little aggressive selling. Next bar, max delta of 698. Final delta 695. Min delta minus 4. Again, all aggressive buying, very, very little aggressive selling. Next bar, 397 max delta, final delta 381. So again, we're closing within 16 contracts of our max delta number. Min delta, minus 35, again, kind of small. So I know that on this move, it's just being dominated by very strong aggressive buying, stronger than normal aggressive buying. Because normally you're going to see mixtures. You're going to see some positive delta and usually some decent min deltas in a bar. But when you see very, very little interest, then it's telling you, that where's the aggressive sellers? They're not really there. Right now, looking at it in the opposite terms, right, the min delta, if the market is selling off, right, you want to watch the relationship of the min delta to the max delta. So we're at the high of the day yesterday. We got a little bit of a sell-off, right? But if you're watching what the min delta is telling you, you could see that, yeah, we're up here at the high of the day. I don't see much aggressive buying. Why? Because I don't see very strong max delta. And imagine you're at your high of the day and the bars up there have very small aggressive buying, right? I mean, you're at your high of the day. You got, 102 max delta, 35 max delta, 200 max delta, 25, 128, 52, 0, right? On this move up, these three bars going up into the highs, you're seeing 591, 825, 1244, right? This bar right here on the extreme left, the delta finished at 589, but you had max delta of 591. The next bar, 825, we closed at the delta. Max delta was 825. This bar at the high, 1244, max delta, we closed at 1215. Then the next bar, minus delta, negative delta. That's not good. Next bar again, negative delta. You make a new high, or you hit the same high, you got delta of 127. Max delta was 218. Why aren't you closing, closer to 218? Instead, you're sort of closing 100 contracts off. Then the next bar, you make a new high. What's the delta? Minus 74. I mean, at one point it was minus 452. It gained a little bit back. But then the next bar, final delta is 369, negative 369. Min delta, minus 394. So, it's closing right near your min delta number. Then the next bar, final delta is minus 421. Min delta is minus 421. Where is the aggressive buying? There's aggressive buyers are coming in here, but they're small. 102, 35, 218, 25, 128. They're being engulfed by the min deltas. We're closing very strong negative deltas. Do you think this market's going higher? No. What's there for the market to go any higher? It's just not giving you any clues that this market wants to go higher. Now, the cumulative delta is, again, it's the delta at, the final delta number, right? The top headline number, and it keeps a track of what it is during the course of the day. So generally, as the market is, if it's a trending day higher, delta is going to keep getting bigger, 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 positive. If it's a trending day lower, with a lot of bars having negative delta, it's going to be a negative number and it's going to be getting bigger and bigger, bigger. But again, there's clues in here in the cumulative delta as to what's happening in the market. Okay, so for example, we're going sideways here. Then the market rallies up, right? It goes from basically the 26th level up to the 36th level. All the charts I'm using in this presentation today are 1 minute E-mini charts. Okay, sometimes I like to mix it up, use a 5-minute chart or, an 8-range chart or a 4-range chart or a volume-based chart. But, then people start worrying because they think, well, am I supposed to be flipping back between charts? No, so today I'm keeping it uniform on one chart type, one duration, and, one market because, reason I generally will show a lot of different charts is so you can see how the same concepts apply, whether it's a 1-minute chart, whether it's a 30-second chart, whether it's a 5-minute chart, a 15-minute chart, an 8-range chart, a 2000 volume chart, or whatever you want to use, or a 987 tick chart. You would still apply the same analysis there. But this is cumulative delta, okay? So we're trading here around the 27, 24 area, and then we go sideways, right? Now what's interesting is we're trading this first bar on the left, cumulative delta is 10,063. Okay, it's positive. But then you just go sideways here, right? Market's not going anywhere. It comes off a little bit, rallies up, comes off. And over here, about 15 minutes later, we're still trading the 27, 26 area. Cumulative delta is 13,000. Okay, so you went from 10,000 to 13,000 in 15 minutes. So it gained 3,000 contracts, the cumulative delta. Market's not moving. What's that telling you? Is that every time the market would sell off a little bit, aggressive buyers would step in. All right, so people are buying this market. They're letting it breathe. Sellers come back in. We're going sideways. They step back up, buy some more. Let the market come off a little bit, buy some more. Let the market come off a little bit, buy some more. Okay, and as you can see here, right, as we sort of break out of this 27, 26 area, after gaining about 3,000 contracts in the delta, cumulative delta, the market popped, right? It went from 27 up to 36. So, understanding how to use the delta is very valuable information. What people don't realize, all these little delta numbers, delta, max delta, min delta, cumulative delta, is a data point basically, right? And you could use that in your trading to make a good trading decision. Now, the second basis of order flow I want to talk about is point of control. And the point of control is the price level in a bar with the most volume. There's no mathematical fancy formula to determine it other than simple arithmetic, right? You're going to take the volume, trade it on the bid, volume traded on the offer. You're going to add those up. If it's the most volume, it's going to put a box around it, a rectangle around it, okay? And every bar has a point of control, right? I put an arrow here just to show you this one. I could put one on each bar, but you get the idea, right? And again, there's nothing fancy, there's nothing sexy about it other than it's the point in the bar that has the most volume. And why is that important? Is because, once you understand volume, volume over time equals value. Okay. And, if you spend any time with market profile and volume profile, you understand the importance of value. And, it's a piece of market generated information that's going to help you understand why bars trade back to a certain level, right? This is, again, a 1-minute chart yesterday in the E-minis. Notice how this bar A, right, trades right back to a certain level in the previous bar. Bar B trades back to a certain level of the previous bar. Bar C trades back to a certain level of the previous bar, right? Wouldn't you like to know where a point is in the previous, where a point that the market can trade back to and then continue on in its original direction? Well, oftentimes it's the point of control. Okay, you can see here, right? On this bar 1215, we traded right back to the previous point of control. The next bar, we traded within one tick of that point of control. The next bar, we traded one tick past it. Okay, and on trending markets, this is going to be very important information. On a 1-minute chart, honestly, it's not as, what's the term? Not, I'll say not as liquid, but when you start looking at longer term charts, 5-minute charts, 15-minute charts, where there's a lot of trade back and forth, on a 1-minute chart, it could happen so fast. But on longer term charts, you want to be watching these points of control. So there's some questions here, but I'm not going to get to those yet. I'm going to get those at the end because otherwise I'll get sidetracked. I'm going to talk a little bit about market profile and stuff. Market profile, you're not going to look at market profile on a 1-minute chart, right, or a 5-minute chart. Generally, people that watch market profile or even volume profile, they're looking at it over the course of a trading day, or a 4-hour period. And, oftentimes if the market makes a move, right, for example, if imagine these are 30-minute bars, okay, and I know that I have a level, if I'll show you later on a market profile chart, but there's even you could be looking at a level. Oh, this is an important level. This is my value area low. Okay, well, we're trading away from it. That's not going to be much value to you. But anyway, we'll we'll talk about it in a minute when I get to that point. Now, the third part I want to talk about is market imbalances, right? Market imbalances occur when there are more aggressive buyers than sellers, or vice versa. More aggressive sellers than buyers in the two-way auction, right? Remember, markets move in a two-way auction. Now, buying imbalance occurs when there are at least 4 times as many traders buying the offer than selling the bid. 4 to 1 is sort of like this industry standard that most people start off with and use. I still use it. It doesn't have to be 4 to 1. You could use 3 to 1. You could use 10 to 1. I know some people that use 5 to 1. It's 400%. Selling imbalance is when there's at least 4 times as many traders selling the bid than traders buying the offer. And think of it this way, okay? There's an imbalance on a seesaw, right? You got your big bear versus the little bear. Well, who's going to win? The big bear is causing an imbalance. Tug of war, 3 against 1. You got 3 little kids here against 1 adult. Well, you might think, well, even though all things being equal, technically the 3 should win. Now, how does it show up on a footprint chart is buying imbalances will show up in the volume as blue numbers. Selling imbalances will show up as red numbers. Normal order flow is going to be black. Now, I know some people use the opposite terms. You will use a black background screen and white text. But you should still have blue numbers for buying imbalances, red numbers for selling imbalances, and if you're using a black chart with white letters, the normal order flow numbers, normal trade numbers would be in white. Now, generally, as a market rises, you see buying imbalances. Aggressive buyers are lifting the best offer and looking for the next best offer. Why? Demand is present. So generally, as a market falls, you see selling imbalances. You see aggressive sellers are selling into the best bid and looking for the next best bid to sell into. Why? It's because supply is present. And if you're looking at a normal candlestick chart or bar chart, you're not going to be able to tell when there are buying imbalances in the market. You're just not. I see sometimes people post charts places, a bar chart, and say, well, yeah, I see, you can see the imbalances here. How? You can't. You're not looking at volume. That's the problem with a normal candlestick chart or a bar chart, is it doesn't look at volume, right? You're just taking all that information that volume provides you and throws it in the garbage. But if you, again, this was this morning in the S&Ps around 940. But if you're looking at a footprint chart, what do you see? Well, you're seeing a lot of buying imbalances coming in off the low. Why? Is because traders like this low price and they want to be aggressive. They want to aggressively get long down here, right? You could even see on the move down on these red bars, you're seeing selling imbalances, but now you don't see the aggressive selling anymore. Instead, you're seeing green bars, but more importantly, you're seeing buying imbalances pretty much in every bar now that you've hit the low. So delta, point of control, and imbalances, are just basic order flow analysis, but you can see how useful they are in making informed trading decisions, okay? And that leads into the next part, is getting an edge over other traders is because you're gonna be able to see things that they're not able to see, right? And you got to remember who you're competing against. Most traders think they're competing against the market. They're not. They're competing against other traders. Okay, and what order flow traders see that regular traders that look at normal bar and candlestick charts is they see the volume, right? If you're looking at a normal candlestick chart, you're not seeing volume. People all of a sudden they just want to take price and distort it, and make it into an indicator and basically try and fix everything around price. So, whether you're using a moving average, volume profile takes the volume, okay? This is nice to see, okay? I used to use volume profile a lot, but, I realized that, it's something that over the course of the day, you should really be reassessing, right? And because if we're trading up here, right? And there's some volume up here. And next thing I know, we sell off to down here. Well, what's this information up here going to do for me? Not a whole lot. You can look at volume profile on a smaller time frame. I like to use it on a smaller time frame, so I could take a look that, as we're sort of, trading above the previous shorter term value area, or, coming outside of the value area, a potential area for a pullback. Okay. That makes, I think, a little bit more sense. The VWAP, okay, people are just basically using this as a bastardized moving average nowadays. Fib traders, okay, they're just basically reacting to price. I got draw my fib lines here. I'll short it at the 38. Okay, well, it stops me out. Okay, I'll get short at 50. I'll get short at 61.8. Next thing you know, it's gone all against them. Trend lines, I used to be a big trend line trader. But the problem with trend lines is you got to keep drawing new trend lines, right? You're breaking out and stuff. Some trend lines hold, but next thing you know, you're looking at your chart. It's like you got spaghetti on it. But what are all these traders doing? Well, they're trading on based on what happened. Your price hit the line, the trend line, so I buy, or price broke the trend line, so I sell, right? Order flow allows you to trade based on why something's happened in the market, or how something happened in the market. For example, aggressive buyers are causing market imbalances, so I buy, right? Like on the low of the day in the S&Ps today at 940. Aggressive buyers stepped in. All you're seeing is a lot of aggressive buying coming in, and the market rallied off that. So, you want to be asking, did the market move up because aggressive buying resulted, and did it result in buying imbalances, right? Did the market sell off because it hit a level resistant based on a large amount of volume at a particular level? Has the market been moving sideways while trading is being absorbed and distributed? Order flow allows you to see market generated information of support and resistance, buying or selling, weakening, where traders are trapped, divergence between price and delta, where value is, where market is out of balance, and much more. So, let's go talk about a few of those. Trap traders, right? Everyone likes to talk about trap traders. And those are areas where traders are long and wrong, or short in the hole. They spelled whole wrong. Trap traders are traders caught on the wrong side of the market, and when they get out of a losing trade, it helps propel the market in the opposite direction. Oftentimes people will talk about trap traders as if there's thousands and thousands of traders that are trapped. Often it's not. Often it's just a handful of traders, but that initial, their initial reversal is sometimes enough to cause a move. Okay, so you can see here at the high of the day. Now, I was telling you earlier, the order flows trader software allows me to do the analysis without having to do it myself. I let the computer do it. And one of the tools that we have on there is we draw these green arrows for trap traders at the, on up candles. Trap traders on down candles will have a red down arrow. So I can see here at the high of the day, this is yesterday, when we hit 28.36, there were trap traders up here. Market sold off on the move up. As we came back into this buying imbalance, the stack buying imbalance, there were some trap traders here. We traded right back to that point of control. Okay, the market sprang up, but then we hit this area up here of some trap traders, and then the market sold off. Another example, this was, again, yesterday, right? We sold off. We came down to this 27, 98 and a half level. Trap traders down here, right? This is the software telling me, hey, Mike, you got trap traders down here, right? I mean, I could tell you why this is, but you sitting at the computer trying to look for it, oftentimes you're going to get blinded by all the other information that you're looking at and some of this other analysis that you're trying to do. I just let the software alert it to me, hit me upside the head, said, hey, Mike, there's potential trap traders right here, right? And if you're looking at a normal candlestick chart, you're not going to see trap traders here. People will say, well, there was a stop run over here, then the market reacted and rallied up. But, at that high here at around the 920 time, right, who's going to see that there was trap traders up here, even though there was, right? Market sold off. There was trap traders down here, right? Just, I mean, go back to the previous chart. This blue arrow is that area on the previous chart that I just showed you, right down here, right? If you're just looking at a normal candlestick chart, you're not going to be able to tell that. You're not going to be able to see that. You're not going to be able to say with authority that there's trap traders there. Let the software do it. Now, the other thing I'll talk about is market sweeps. Okay. What is a market sweep? A sweeping action is when a large trader has to execute an order which will move the market. It wants to get on as much as possible, as quickly as possible by buying through several levels of the offer or selling through several levels of the bid. Okay. And we used to use this term, sweep the leg, Johnny, the old Karate Kid movie. Because, when we're working, before when I was working on the institutional side, we would have a position that we want to get on. We just look at the order book. Okay. Let me see how much I could buy. And we just buy it up how many levels. If I could fill the whole order, okay, fine. Because I wanted to get in, as quickly as possible. Actually, the old NYMEX access system, the electronic system back in the 90s from NYMEX, they had that function. You could do it. It was kind of neat, and that's how. That's why a lot of crude oil traders sweep the market. That's why sometimes in crude you see a lot of sweeps. But if you're looking on a normal bar chart, you're not going to be able to see where where traders swept through the market. But on a footprint chart, you can get a clue by looking at the volumes that are being traded, and it's often against imbalances, right? So you can see here on this blue arrow, you see very little counter trade. You see 1, 2, 3, 4, 5, 6, 7 buying imbalances here. But look at the counter trade. It's 0 against 8, 3 against 28, 0 against 31, 0 against 25, 9 against 70, 3 against 29, 61 against 275. Okay. Someone just came in and basically bought it from 01 up to 03, turned it bid. There's 209 now on the bid here, right? Market went up. Next bar opened up, traded right back to that level where that heavy volume was, right? And then continued back up. Somebody swept through that market here, right? Down here, I would call this a sweep just because there's a few strung of zeros here. You got 0 against 40, 0 against 68, 21 against 148. Then it turns offer here with some decent size. So somebody just sold it down 1 point here. Somebody bought it up 2 points. People say, well, why would somebody want to buy through the market? Well, they think the market's going to move, right? And they think that if they don't do it, somebody else has the same idea of them as them. They're going to buy those offers or they're going to hit those bids. They don't want that, right? Traders are greedy in general. They want to get in out of a position as quickly as possible with as most money as possible. Here, it's another nice example. No counter trade. 2 against 19, 2 against 42, then 0 against 50, 0 against 64, 0 against 69, 0 against 109, 0 against 125, 0 against 124. This was just someone come with a big order, maybe by about 500, turned it bid here. Maybe they're buying 1,000, turned it bid here to get the rest on. Okay, why? Is because we're coming up off a swing low. Traders like buying off lows. And you see no counter trade. If there was counter trade, instead of just 2 against 42, instead of just lift this offer in a split second, just like that, right? Just buy me 1,000 up to 60. Their average price is probably going to come out around 27.59 and probably 59 and 0.34, something like that. Well, it just looks good when the market's trading 27.61. You got to think about that, all right? The sweeps happen fairly regularly. Now, taking it a step further on points of control, right? Remember what I said before as point of control acting as key support or resistance. Now, what I've done in the software is I want to highlight what I call prominent point of controls that mean something, okay? And again, if you're looking at a normal bar chart, you're not going to see the point of controls. So I'll just stick to an order flow footprint chart. Now, again, every bar has a point of control, as you can see, right? That's the big rectangle here appearing, but there's going to be times when a point of control is very important and it's going to act as support or resistance in the near term. Okay, this is it right here where the circle is, And the software, the order flow trader software, will highlight it, right? It colors it, it's a cyan color. And you can see how the next bar opens up, trades right, gets to that point of control, gets one tick through it, trades just 4 contracts, and the market had a nice rally off that, off this, not off this point of control, but the point of control is telling me that there's, in this case, support here, right? If it was on the upside, it would be a bearish point of control, which would be colored sort of a magenta color. Okay. And again, if you're just looking at the normal footprint chart, trying to decide, well, which point of controls matter here? Does anything matter at all? Well, let the software do it for you. It's right here in the middle at 1150. These 2 points of controls are prominent point of controls. You can see it's coming in right off this lower, this low of this range here. And you get a nice move from 26 up into the 30s. Then you go sideways here. Then you start coming back down to that area. But this was the move to be had here, right? Imagine you're getting long around, the 26.5, 27 area. You go all the way up to 30. Okay, then it just goes sideways. You should be able to recognize when a market is going sideways when you start putting together, bars at the same heights. That's a sign of a market going sideways. Now, again, prominent point of control, right? Market went up, hit a level, sort of went sideways, started coming off, hit a level, went sideways again, right? Well, wouldn't you like to know, areas that you can buy or sell based on support or resistance generated by the market? Well, these are those areas right there, right? And if you're not using a software that's going to highlight it to you, you're just going to be guessing, right? Let the software highlight it to you, right? You can see here, right? It's magenta color. Okay, comes off to where? Here, where you got a cyan color. You got support now. Okay, you can see how the market went up, came back to those levels, went back up, came back to that level, went back up, came back to that level. So, what was that? The aspects of order flow analysis, such as point of control, delta, imbalances, and other information, is a very useful tool for assessing the market, right? You want to be able to identify and evaluate trading opportunities. And perhaps the most important is adding order flow to your trading arsenal is going to help you in finding trades that the public misses, right? That's the power of order flow, is seeing things that other people aren't seeing in the market, but is it's not like hocus pocus stuff. The exchange puts out data. Use that data, right? Why do you want to not use that information? There's a reason why the exchange puts it out, and these big trading firms pay a lot of money for data, right? They pay a lot of money to data mine, all these data points, delta, point of control, max delta, min delta. These are all data points that are being used by HFTs, by, obviously tape readers, by order flow traders. And, honestly, if you're not using that information, you're not going to, I don't want to say you're not going to be successful trading, because there's different ways to trade, but, it's like being in a car, right? My wife's a good driver, but she just knows how to look at the speedometer, how fast she's going. She doesn't care about how much oil's in the car, how much air's in the tire, um, how much, tire pressure is or anything like that. I'm interested in it because I know that if tire pressure is low, it's going to affect the performance of the car. If oil is low, the car's going to eventually stop working. So yeah, it's just information that you can use in your trading. Now, the last part I want to talk about is becoming consistent in your trading with order flow. And people always ask, Mike, what's the holy grail with in trading? There is no holy grail, but really the holy grail is becoming a consistent trader. That's like the holy grail. People think, what's the holy grail? Is like some thing a cup you drink out of or something. It's not. It's more of a concept. It's consistency. It'd be like Michael Jordan found the holy grail for basketball, is being consistent basketball player. Whether he's playing in practice or playing in game 6 of the finals, he puts that same intensity and focus all the time, right? And being a consistent trader is, being consistent in your market analysis, being consistent in your order entry, being consistent in your focus, being consistent in your action, right? That's why yeah, I'm from Chicago, so obviously I'm a big Bulls fan, okay? And there's always this talk, Michael Jordan or LeBron James, who's the GOAT, and the greatest of all time. And for me, there's no comparison because Michael Jordan would put it out there all the time, every game. LeBron James is, okay, now I'm turning on playoff mode, like making a playoff run in the season. No, you should be playing at that same level all year round, not just taking it easy, waiting for the playoffs to come around. It's such a waste of talent in that case where, this guy, LeBron James is so great, so good. Imagine what he could, the level that he can be at if he's applying that day in and day out. So, it's hard to be consistent as a trader when you focus on the outcome more than the process. Put it another way, right? We're more drawn to positive feelings of outcomes rather than the struggle of the journey. Most of us quit during the struggle before we can experience the rewards of staying the course. And in trading, what that means is, you know, people they want to go out and buy a system, right? Buy an indicator, and after a couple of losing trades, that's it. It doesn't work, and give me my money back. You're whatever reason, but it's because they don't stay the course, right? They don't, you know, they get sidetracked by one or two losing trades, and then they don't understand it. Their whole trading plan gets thrown out the window. They should be trading one lot. So the next thing they know, they're trying to trade three lots to get the money back. That's not being consistent, right? Being consistent is like a process, okay? And oftentimes, as traders, we get so caught up in, I hate to say, the money of it, but you know that's why, honestly, that's why a lot of people come to trading is because of the money, because it can be very good if you're good at trading. But they're looking at the outcome rather than the process. And for me, that was the big difference, is the process. Understanding how the markets worked, what made the markets go up, what made the markets go down, right? The outcome, once I understood how the markets worked, the outcome was the rewards, right? It would come to me naturally as long as there was decent commitment to the process. Now, order flow analysis allows you to become consistent because it's based on the same concepts we use in our daily lives, right? You buy on strength, you sell on weaknesses. You just have to apply it to the market. And if you're looking at a normal bar chart, right, and drawing your trend lines, where's the strength or where's the weakness? You don't know, right? You don't know if this trend line is going to hold or break because you don't know how strong that move is or how weak the move is, right? If it's testing a trend line to the upside, okay, when we get to that trend line, is the market strong or market weak? That's how adding order flow is going to help you in your trading, right? It's going to help you with your entries. It's going to help you with your exits. It's going to help you with your money management. You know, Lack of consistency brings a lack of interest, right? If people like to, the butterfly effect is what I call it. They like to jump from indicator to indicator, and hopefully something sticks. It's like a butterfly, goes from flower to flower, right? It goes from pretty flower to pretty flower. Be consistent with something, learn the process, learn what it takes to make something work. That's why, um, the best, I want to say the best, but good cooks, okay, are people that enjoy cooking, right? They want to try new things. It's not like, well, you buy a cookbook, you try one recipe, and you don't like the way you cooked it. So, Julia Childs, she doesn't know anything about cooking. She's a scam artist putting out these cookbooks. Her recipes suck. Well, maybe it's not Julia Childs. It's you, the one that's not following the directions, not cooking it properly. So, you're not consistent in following the process, right? Constantly rejoin levels, right? If you're using, pivot points or trend lines or whatever, adjusting them is not going to be consistent, right? It comes down to understanding why the market is trading in a certain way as opposed to what the market just did, right? And, practice, practice, practice. Everyone thinks, there's a saying I remember growing up, how do you get to Carnegie Hall, right? Carnegie Hall is the big concert hall in New York City. and they say practice, practice, practice. I mean, you got to, keep practicing your violin. Well, it's not just practice, okay? You have to have learning. You have to have training. You have to have instruction. You put that together with your practice. That's how you reach success, all right? And by understanding what's happening in the markets, you can understand why a market is rallying. Okay, so like here, right? Market yesterday rallying up to new highs. Anytime you get to a new high, you want to be asking, can this market go higher, or is this market going to start selling off? Well, I know just by looking at the delta. This is what I call the delta surge. You got these three bars here as you're making the new highs. 184, 587, 1411. Delta is growing. It's getting stronger. Okay, I know now aggressive buyers are in control. Obviously, you got the positive deltas, but they're getting stronger coming into the market. I see buying imbalances. Yeah, I think this market's going to go higher. Okay, putting it together, right? High of the day, right? Anytime you had a high of the day, you want to be asking yourself, are we going higher? Or is this it? Is this going to be our high of the day for the day? Or are we going to make a new high? So we're at our high. What do I see? And again, it's not about being so smart, about being a rocket scientist. Nowadays to get a job in a trading firm, you literally have to have a math degree or a physics degree or something. For what? All you got to do is simple. Our aggressive buyers are in control. Yeah, on the way up they are. You hit your high. Okay, I know I got some trap traders up there with this red arrow, but just looking at these bars, I see aggressive sellers, more aggressive sellers, more aggressive sellers. Well, if aggressive sellers are in control and you see the negative deltas, do you think the market's going higher or not? No, the market's not going to go higher, right? It's more inclined to come off if aggressive sellers are interested in selling at the highs. Now, a lot of times markets bump around up or down, a little rally here, 5 points, 10 points, come off, go back up. Here was, a market, this was yesterday, market was coming off a little bit. You hit these, 4 or 5 bars where you got positive delta, okay? On this move down, yeah, mostly negative deltas. You got some small deltas, 2, nothing, 41, small, 267, okay. But everything else is mostly negative, 400, 500 negative, 300 negative, 500 negative, 1,000, 400. Then you hit this 3-bar area, positive delta, 369, 726, 685. Market is starting to tick a little bit up. Is this going to be a new swing low? Okay, well, possibly. But as you're watching what's happening in the market, you get up to this little high here. What's the delta? It's 12. At one point, it was positive 292. This market's not going to rally up on small delta or negative delta. It finishes at 12. It was positive 292, so it was plus 292 just to minus, ended up at 12. So it got all the way up there. Then it came all the way back down in terms of delta. Right, got up to 292, gave it all back, basically 280 contracts, closed at 12. Then the next bar, big strong negative delta, 774. Min delta was 829, so we're closing, pretty close to our min delta number. And you're seeing 1, 2, 3, 4, 5, 6, 7, 8 selling imbalances in that bar. You basically took out that whole move up. Obviously, the point of control, we're below the previous point of control, which is also bearish. And what happens? Boom, the market sells off from 12 down to 02 over the next 8 minutes. Right? That's how order flow is going to help you see things in the market that other people aren't seeing. So let me ask you a question, right? If you see net aggressive buying, i.e. cumulative delta positive at the lows of the day, then the market bounces and retests the lows, and cumulative delta is not only still positive, but stronger. Do you think the low is going to hold? What do you think? I mean, obviously it's you're at your low, you're pushing down into lows. Cumulative delta should be negative, right? It should be getting stronger negative, not stronger positive. Okay, so this was this morning in the S&Ps, right? We hit this low here at 940 at 51 and a quarter, right? Cumulative delta is 3,964. Okay, we rally up a little bit. Okay, then we come back down, we get within about a point and a half here at 52 and 3/4. Cumulative delta is now 7,000. Okay, so it went from 3,900 to 7,000. Okay, then you take a look again. Here, come to the swing low, it's 6,400. So, it's a little bit less. It's like 600 less than it was just a few minutes ago. Now you start putting in a little bit higher low. It's 7,400. When I say a higher low, you're talking less than a point. You're talking about 3 ticks between this low and this low, but it's 7,000 now, right? Then as you can see, the market starts moving back up. Okay, but you got to listen to what the market is telling you, right? This is it on a chart, on a bar chart. It's a little easier to see. 3,900 at the low of the day. Still hanging around your low of the day. Now cumulative delta is 7,000. Still hanging around the low of the day, 7,400. Before you got this move from 60 up into the 70s, right? So as you can see, aggressive buying, right? Cumulative delta is getting stronger. You're at your lows of the day. Do you think we're going to go lower if every time you sort of come back to the lows of the day, aggressive buyers appear and start buying it? No, right? It's like I said, it's not. There's some science behind it, but it's not rocket science. Consistency is what transforms average into excellence. People think that trading systems and methods are magical, right? And I could say from my own experience is, from people that have bought my software is, sometimes, it's just like, they want something that's just going to spit out trades, buy here, sell there, buy here, sell there. No, there's going to be times, order markets exist for a purpose, right? They exist to transfer risk, but there's times that what's happening in the market is so obvious, so clear that you can't help yourself but taking those trades. Everyone thinks that order flow is going to be like this magical thing that's going to give them every single turning point in the market. No, it's not. It's a tool, right? Just as, carpenters have a set of tools, order flow is a tool. Okay. And, people will say, well, if order flow is so great, why don't you just keep it to yourself and make a lot of money? I did. I made a lot of money, trading. I had a very good career. I was able to retire at 43. I didn't want to eventually get into a software business. That wasn't my goal. I sort of fell backwards into it, after writing my book and creating my software for myself. But, reaching the top, reaching, a high level doesn't mean somebody else gets pushed down. There's a lot of room for everybody up at the top, right? It's not like, oh, you get up to, a very successful level in trading that you knock somebody else off the pedestal. No, you don't. It's a level. Everybody's welcome, right? Now, order flow analysis provides you, the trader, the kind of advanced information that you need to gain an edge over other traders, the competition, right? And people say, well, when I talk about competition, knowing who you're trading against, the market or individual traders, it's the cumulative of the other traders, I guess. But it's a bit esoteric in that sense. When I say you're not competing against the market, you're competing against other traders. You're competing against other traders' thoughts in the market, what they view the market, right? I see a lot of people, everyone's got a view on the market. Everyone thinks that its market's going up or it's going down. You ask anybody, a taxi driver, a hairdresser now, everyone's going to have a view on where they view the market. And, that's understanding sort of the mentality that you're competing against. So, but hopefully by now you can see how powerful order flow is and the analysis in determining, things like price. Well, I didn't talk about price rejection, but seeing support and resistance, price rejection, order flow is great for seeing prices being rejected. And that's very good, especially if you're using, if you have your own levels, right? If you have a way, your own pivot points or your own way of trading, watching how the market comes to those levels and reacting at those levels is going to give you insight into taking a better trade. Most traders don't good traders, they don't always just take, there's a signal, I got to take it. No, they like to see how the market reacts around it. And by using order flow, you can see how the markets react around levels. So, hopefully by now you'll want to add order flow to your trading. All right. And there's different ways you could go about this. Number one, you can do it on your own. You can spend a year, 2 years, 3 years, 5 years looking at a screen, trying to figure it out yourself. Spend 10,000 hours. Honestly, there's probably people out there who spent 10,000 hours looking at a dome, looking at a footprint chart, still don't understand it. You could waste a year losing more money trading, right? Or two, you get an education software from a trader who successfully traded order flow at the highest level for decades. You can skip the massive trading losses, skip the wasted time. There's a saying, time is money. And it's really true, right? You don't waste your time trying to figure stuff on your own when you could fast track it. It's like going to Disney World, right? You could fast track certain rides. When you get your ticket, you say, okay, I want to do this, I want to do it's a small world fast track, so I could skip the line. And, I want to do Toy Story thing. I want to skip the line. The other ones, yeah, fine, I'll wait in line. And training's the same way. Why should you sit there? Well, no, I'm going to spend years trying to figure this out. I'm going to stand in line trying to figure it out when you can just sort of jump the queue. Now, the Order Flows Trader is a software that I created. And when I say I created, my programmer created it based on my input, right? What I wanted to see. So all the tools you see in there are my own ideas that I've used in my own trading. A lot of people have seen my software, taken those ideas, try to reverse engineer them, put them out in their own software as algo this, algo that, order flow algo this, order flow algo that. When it's not any fancy algo. They like to throw around these buzzwords, like algo. So people, oh, it's an algo. I better spend $1,000, $2,000 buying the software because it says algo in it. It's not. I just showed you how to simply look at delta, point of control, and imbalances to make good trading decisions. Now, the Order Flow Trader software is for NinjaTrader 8, and it's going to work on the paid version. It'll work on the free version. So if you're trading, if you live in Malaysia and you trade through a local broker there, you can get the Order Flows Trader, put it on the free version of NinjaTrader, just get a data feed, and you could use it as your charting software. Just enter your order through your broker's front end. And it comes pre-programmed with 7 of my order flow indicators. I talked about the trap traders today. I talked about the prominent point of controls. There's other ones like market sweep, ratios, divergence, and a few others. Normally I sell this for $8.99 on my website, right? But having order flow software is one thing. You have to know how to use it, right? I don't want to just give you software and send you on your way. Okay, go spend the next year learning how to read order flow. That's why I provide a lot of education, okay? If you get my software, I give you access to my order flow trading course. It's a 20 video lessons, 15 hours of video instruction on there, right? I originally created this thinking it would be something people can binge watch on a weekend in 6 hours. And after I finished recording, it turned out to be 15 hours. But then people asked me, I want to know more about order flow. So I created this inner circle a few years ago, and there's 56 videos in it on advanced order flow tricks, tips, and analysis, right? And I'm going to give you access to those 56 videos. Normally, if you want access to that, it's going to cost you about $500, $497, just to get those 56 videos. But I'm going to give it to you also for free, all right? So normally, the software is $8.99. The order flow trading course, $297. The Inner Circle video series, $497. That's $1,633. Okay, but I realize, now everyone's on sort of house arrest on this lockdown. People got a lot of time to spend, and so I'm going to give an extra course. It's what I consider my favorite course that I created on order flow trading, the order flow playbook. Right, you could buy it off my website. Normally it's $297. I'm also going to include that for free. Right, so all that together, $8.99, $297, $497, $297, it's $1,900, almost $2,000. But maybe you're skeptical. Mike, I don't know about your order flow software. This is what other people are saying. Mike, your order flows trader software is remarkably helpful. I can see clearly now what's happening in the market. For example, who's in control on the market on a very specific time and who's getting weaker as well. other comments on my YouTube channel, right? Personally, I'm very thankful for all the learning. And yes, my trading and understanding of financial markets are way better than a lot of traders out there. Okay, I'm writing this because I saw the difference. And when you are in it and learn trading with order flow, you'll notice that this is true trading based on economic laws and common sense. Thanks a million, Mike. I took your course a month ago, right? You really give a fresh and sane air in the field. Very impressive. It's out there, but, success, you have to go get it, right? It's just not going to fall into your lap, right? You have to be aggressive. So, if you want to get my software, what you got to do is you go to orderflows.com/oft2. Okay, see the link is there in the chat box, right? It's just $6.75. It's a one-time payment, right? And normally I don't sell it this cheap. Honestly, I sell it for more. But we're on this lockdown thing, and a lot of people are struggling to. Some people don't know if they're going to have a job in a month or two. Some people already lost their jobs. So I want to lower the barrier of entry so you can take advantage of this downtime to learn more about trading, learn more about the market. So what you got to do is you go to that page, orderflows.com/oft2. This is what it looks like. You just scroll down the page, right? You can watch the videos in there. I give a very clear explanation of what you're getting, right? You're getting the Order Flows Trader software plus the education courses for $6.75. Then you click on that button. I want this, right? It takes you to PayPal. PayPal processes the payment. I don't get your credit card. I don't want it. PayPal handles all that. So you just go to orderflows.com/off2.html. Now, what no one's going to tell you about becoming a successful trader is it takes work on your part, right? People who buy order flow trading software and fail do so because they think they're buying an easy pie in the sky, get rich quick magical formula, right? People that fail don't want to understand what's happening in the market. They just want, tell me where to buy, tell me where to sell. Honestly, if that's your mentality, if you don't want to understand what's happening in the market, my software is not for you, right? My software is for those that want to understand how to read the market. Okay. So, you know, sometimes people think they're buying a software that's going to feed them, soothe them, change their diapers. No, it's not. What's going to do is going to take the information. It's a tool, right? And put it into an easy to read format so you can make an informed trading decision. And again, it runs on NinjaTrader 8, right? And you can see, okay, what's happening in the market, right? Here's a market that was selling off, right? You got aggressive sellers coming in here, selling imbalances, all negative delta. You hit your bottom here, aggressive buyers come in, stack buying imbalance, positive delta. Then it just sort of goes sideways a little bit. And then the aggressive buying reappears here, positive delta getting stronger as the market is rallying back up, right? If you don't want to do that, take, I don't say do the work, but just have that information there so you can make your trading decision. Then again, order flows is not for you. Order flows for people that want to be traders, right? People want to be a trader but don't want to put in the time and effort. Honestly, like I said, I've worked at very big trading firms, JP Morgan. Nobody uses an indicator there, right? They learn how to read the market. When I worked at Cargill, someone made a comment earlier in the chat about salt. Cargill Salt division is actually a big division, and that's actually how Cargill got started, was in the salt business. They were transporting salt up the Mississippi River. They would transport like meat down the Mississippi or corn down the Mississippi and salt back up. But people that learn how to trade at Cargill, they have a very good training. What do you want to call it? Trader training program. Is they teach you how to understand what's happening in the market, right? And order flow teaches you what's happening in the market, right? You can see here how the market, you had a bearish prominent point of control, market sold off, then the market started rallying. You got multiple buying imbalances in these bars, 3 here, strong buying, positive delta, right? The market goes sideways, a bullish prominent point of control, some more positive delta as the market goes back up, right? Being able to just see that information, see that what's happening in the market at a glance is going to give you an edge over somebody else, right? It's going to, because people aren't going to notice that, hey, I've got a market generated level here, bearish prominent point of control. Tell me there's resistance here. And it sells off to where? An area where you have a bullish prominent point of control telling you there's support down here, and the market rallies right back up, to where? Your previous resistance level, right? So again, like I said, it's understanding the market is going to make your life a lot easier. So, if you stuck around, thank you. It's been going on about an hour and 20 minutes. You can get my book. Go to orderflows.com/book.html. You got to enter your name and email and hit submit. It takes you to the next page, which is the download page. It'll actually load it into your browser. And then you can just download it, to your computer or your smartphone or whatever you're using, your tablet. And it's a good read. It's a very good read. So, why you want to get involved in order flow analysis is because it's going to transform your trading. I've seen it. I've seen with people that brand new to order flow. I've seen how it changed their trading and it's improved their trading, right? You want to understand why and how the market is trading, what's causing the market to move, right? More importantly, you want to become a consistent trader, right? You don't want to just be taking stabs in the dark. Well, I think this trend line is going to hold or not. That's not being consistent. But more importantly, right, you want a life of freedom and fulfillment, right? I'm not going to sit here and tell you, oh, you're going to be a millionaire in a week. No, you got to do work on your part. But if you put in the work and you take the time to learn the markets, yeah, you can be greatly rewarded. So go to orderflows.com/oft2 and it'll take you to, how to get started. So I'm going to go through a couple questions really quick. And one question is, does it work on FX? Well, most people that trade with the FX, they will trade the CME FX contracts, the euro currency. It's very easy to open a futures account compared to a forex account, and there's even micros on forex. But the difference between a forex market and a futures market is the data. The data is centralized in the futures. On forex, it's not. It comes from many different sources, and the source, what you're using to trade against versus if you're trying to do analysis on it, is not necessarily giving you all the information. Sometimes they aggregate the information, and sometimes they don't even include the volume information in there. So, you want to use the what do we call it? Use the futures data. Now the surge, questions about the surge. We are recoding it because there's an issue with it in the licensed server. It's asking people for, it's not reading it because it's not reading the license server. We're hopefully going to get that up, the new version out, hopefully soon this weekend. The surge is a free indicator on the website, but I just showed you how to see it on the order flow chart. So, you can see it. It's nice to have it, but, again, it's nothing super fancy about it. But again, we are updating what was on the website because there was a new thing on the NinjaTrader 8 upgrade that caused it not to give any signals for some reason. NinjaTrader, again, the indicator, the order flows trader software runs on NinjaTrader. Okay, I said it'll run on the free version as well as the paid version. So if you have already, your broker is giving you a trading front end, or you use, another platform to trade, you can run the free version of NinjaTraders, put the order flows trader software on it. You just need a data feed. It will run on the free version. Someone asks, how is this different than Noft? Well, Noft is similar. Noft is they changed their names recently, I think, anyway. Noft is also an order flows software. It's a volume footprint chart. I don't know much about it. I've never used it, so I can't really compare. But it's a footprint chart, so it's relatively similar. People ask, comparing it to things like Zone Trader Pro. Again, Zone Trader Pro is another software. I don't I don't use anybody else's software. I know a lot of these companies have taken my ideas and put them in their software, but they don't understand, how to use it. Like Sierra Charts, right? Sierra Charts has a footprint chart on their software, and every 6 months or so, people put on the Sierra chart message board, hey, can you add this? And it's one of my indicators, and eventually Sierra charts gets it, but people don't know how to use it, right? I teach you how to use, you know, why I have a ratio, how to use it, the ratio, how to use, how to find the trap traders. You know, just because you got an indicator indicating something, you have to take it in context with what's happening in the market, right? If just because you got a buy signal, right? The market just rallied 20 points and you get a buy signal. You want to buy it again? Probably not, right? You've already had the move. So yeah, if you're going to learn something, learn from the person that created it rather than somebody that copied it and put it in their software for having it in their software sakes. Let me just go through a few more questions here. Can it be used on futures and equities? Yeah, I'm a futures trader. I'm from Chicago. I trade futures, equities. Some equities that have a lot of volume, on thinly traded markets, you're not going to get enough information because it's thinly traded. So, order flow revolves around volume, right? In addition to price and time. So if it's not putting in a lot of volume, then it's going to be more difficult. People ask, any training? Yeah, I give a lot of training. I even have, I didn't put in here, but I also have a weekly live group training session that meets Monday nights, 7 until about 8 o'clock Central Time. I go over, interesting things that I saw in the order flow in the last several days, well, Monday and usually towards the end of last week. And again, I've been doing that for the last couple of years. There's an archive of those videos as well. And, you could go there, you could ask questions in there as well. So anyway, I don't want to go on too long. It's about pushing an hour and a half already. There's everybody that's stayed on, thank you for your time. I realize that, to sit through an hour presentation and then pushing an hour and a half is asking a lot. So, any questions, my email is mike@orderflows.com. If you're going to send me an email asking about the Delta Surge, just be patient. We're going to get the new version out. It just came to my attention recently, and I've been going back and forth with my programmer to get a newer version released so that it will work properly. And again, and that's just something out of my control. I don't do the programming. I'm not a programmer on the trading side. So just be patient on that. And again, it's very easy to get started. Again, the price is affordable for a lot of people. And again, ask yourself, most of you guys that are interested in trading, you've been interested in trading for a while now, right? Ask yourself where you were a year ago versus where you are right now. Have you made any progress? What have you done to make that progress? Now think ahead 1 year from now, where do you want to be? And think about the steps you're going to take to get there, okay? You got to get the education, right? If you can't get the screen time, if you can't get the actual trading time in, you got to get the education. There's just no way around it. And it's just like, studying for an exam, okay? If you don't know the material, you're not going to do well on the exam. And if you don't understand the markets, trying to trade the markets, you're not going to do well trading. So, on that point, I'll end it. And again, any questions, just shoot me an email, mike@orderflows.com. I'll do my best to get back in a timely manner. And again, the Surge, we should have a newer version out there. Go to orderflows.com/oft2. Have a great weekend, everybody. I'm sorry, it's Wednesday. Have a great rest of the week and have a great weekend. Bye-bye.